Welcome to Commercial Connections Investing with Confidence. It's Friday, which means it's time for our Multifamily Minute, a quick look at what's trending right now in the Eugene Springfield multifamily market. Rene, as owners are looking ahead and thinking about timing, I keep hearing this question come up. What do you think the commercial real estate market is going to look like in 2026?
Well, I appreciate the question, Brittany, because I do get that a lot from owners when they call me. What we are anticipating is Jerome Powell just announced that they're really neutral on interest rates. But we really think what's going to happen is when the new Fed chair comes in, if they don't drop interest rates over the next couple of months, then when the new Fed chair comes in, then that chair will drop rates. And then that's going to put us into a whole different cycle. The interesting thing is there is lots and lots of cash on the sidelines where people are sitting on $15-20 million in cash right here in Eugene, Springfield, and they're buying properties for cash. They may start where they're going to get a loan, and then maybe during the process, underwriting becomes difficult because the roof is dated or insurance becomes a problem. So then the buyer just flips and says, okay, I'll just pay cash and close, but I want a discount. The seller's relieved because they get to keep their deal together, and then it's a happy closing. So moving forward, yes, it would be great if interest rates would drop, but we are still seeing a lot of market activity because there's cash on the sidelines.
I think that's amazing. So could you give me like a direct example of what it would look like if we get that new rate cut? Like what are some things that would shift?
Well, I think what'll happen is right now, when people are underwriting properties, they're only looking at in-place rents and they're looking at what the property is generating right now. And they're being conservative as far as saying, well, we're only going to figure 3% rent increases. They're just being really conservative. And when they're looking at what cap rate they're going to use, we call it an exit cap. So you buy today off of a cap rate, but going in as a buyer, you want to think, okay, when am I going to get out of this? Am I going to sell this in 3, 5, 10 years? Or is this a long-term hold in my portfolio? Most investors that buy look at it and say, I'm going to look at this from like a 3-year perspective or a 5-year because they want to turn their money. That's how they make money, is turning it by improving the properties, renovating them, and then selling them as the market starts to go back up in value, either price per square foot, price per unit, or overall price. And investors are always trying to look for that. We call it the upswing in the market. And I really think that upswing that we're going to see in the market will be as interest rates start to drop, because that's going to free up more capital. Right now, lenders are super conservative. So as lenders become a little more free flowing with cash, I think there'll be more buyers out there, and then more sellers will see an opportunity of what they could exchange into.
Is there any other like predictions that you see coming for 2026?
It's really an interesting market. It's hard to say because, you can get on Google and TikTok and all the social media sites and read a bunch of different things, but really it's just people pontificating what they think they're going to see. I think we're still in a healthy market. It's balanced right now. Buyers are conservative in their underwriting. There's not a lot of multifamily properties on the market in Eugene, Springfield right now, which says sellers are being cautious because interest rates are still high in their mind. And I think there's still a disconnect with cap rate. Right now, we're at about a 6% cap rate range for the average sales price. So there's a big split there, because when somebody goes to borrow money, if they have to borrow money at 6.5%, they're going to want a bigger spread on the difference between the cap rate and what they're paying for interest rates. So I think it'll be an interesting year.
And I think there was a new report saying that we might see like housing prices become like more inflated. Is that something that you think could happen? And what would be the reason for that, do you think?
I didn't see that specific article. Was that related to single family properties or?
I think it was related to single family homes. I saw it on a headline something from like reports from Trump saying that he was going to ensure that housing prices like go up instead of come down. Is that something we should be looking into? Is that worth like investigating?
There's also, I think he recently suggested that he wants the big institutional companies to be out of buying single family portfolios. But really, when you look at the fraction of the single family houses across the United States that the big institutions, the big REITs like Blackstone that they own, it's a fraction of the portfolio. I think there's a misconception that these guys come into communities and they buy up big blocks of homes, and then people are locked out of being able to buy houses. What I see happening more is like Airbnbs and things like that, where, people will buy single family houses and then turn them into Airbnbs so they can make rental income off of them. And what I'm seeing and hearing is they're going to start calling it, I think it's called a bedroom tax. And I think they're starting it in like San Diego, where they're going to charge if you let bedrooms set vacant, because they're trying to drive out Airbnbs. Now, I haven't researched any of that. David Moore mentioned that to me, so I don't know much about it, but we may see some pockets of big cities that start to put tax in place to try to force landlords to rent out units.
Yeah. No, I mean, that makes a lot of sense. I think the Airbnb market, there's so much shifted. Like it came in like a swoop. A lot of people got advice to start that business. But then I know a lot of city ordinances were working to make sure they can't, like in Glendale, California, it's like completely Airbnb free. You can't have them there. So maybe could be something we'll see down the line. Is there any other 2020 predictions that you see for multifamily and or any office rumblings that you're hearing of?
Office is still down right now. The average price per square foot is on average about $245 per square foot. Compared that to 2020, 2023, it was more in the $290, $300 a square foot. So the office market is down in price per square foot. We're not seeing as much movement. I think there's a lot of people that are still trying to figure out if they're going to downsize because they're going to let their employees work from home, or are they going to force their employees to come back to the office. What I'm seeing in the Eugene market is most employers are trying to do a happy balance where they bring the staff back 2 days out of the week, maybe 3 days out of the week, and then they get to work the rest from home. So the office market in Eugene is stabilizing at this point.
That makes a lot of sense. It's wild to see that we're still seeing those trends, like even 5, almost 6 years later now for office still. And then is there anything about this specific market that we're in right now that reminds you of a past market that we had historically?
Well, it's just the typical cycle when we are in a recession. We're getting ready to take that upswing and come out of the recession. It'll take interest rates changing that will bring us out of the recession, where we have more inventory on the market and more sales activity. Right now, it's still pretty flat.
And what does this mean for multifamily home buyers today?
If you're an out of state investor, I would really caution you, make sure, especially if you're buying around the University of Oregon area, because there's a lot of new units that are being built. Make sure you're talking to an expert in the market so that you're aware of walkability and how close you are to campus, because that really matters. If you're buying more just a general apartment and you're already in the market, just look at the numbers. We're still seeing operating expenses be high and be a detriment to people wanting to buy property.
But having like a good amount of cash on hand is pretty important at a time like this time right now.
Well, most lenders are going to require between 35 to 40% for a down payment. So it's going to take some serious cash to get into commercial property right now.
Before we wrap up, one quick resource that may be helpful if you're listening and you want to understand how this affects your property specifically. Rene is offering a free pinpoint price evaluation. That link will be in the show notes. You can also download our Eugene Springfield apartment market snapshot at apartmentpricereport.com. That's aptpricereport.com. And we also have the University of Oregon apartment market snapshot. You can find that link at uoapartmentprices.com. That's uoapartmentprices.com. As always, those links will be in the show notes. We really hope you enjoyed this episode today on our look ahead. We'll see. Maybe, we'll come back at the end of the year, see what some of those predictions looked like. So thank you, Rene, for giving us your 2026 predictions. Thank you to the audience for spending a few minutes with us today. And we'll see you back here next Friday for another Multifamily Minute.